All right, guys, what is going on? What up? What up? There we go. What's Gucci? Where's everybody at, bro? We only got like 18, 17 people in here. Where's everybody at, bro? We were starting to get near 100. Now nobody shows up anymore. Is it something I did, chat? We lost like 20 members, losing live viewers. What did I do, bro? What did I do? I mean, like, dog, I tweeted the very imbalance, bro. You know what I'm saying? How do I lose people? How? What is it, dude? Help me understand, dude. Help me understand. Help me understand, chat. Learn me something. Learn me something, chat. Man, I need a drink. What's good, Mason, Sean, Flacco, Ray, Zocjo, Mason, Z, Alex, C. What up? Marshall, Toby, Eberneth. They want signals. I've been giving free signals for a while. Clean lows on ES. Well, if we're higher, but I'm saying we got clean lows, that means lower, you know? You know? Was good. Limitless. Was good. You know what I ought to do? Let me see. I'll open the chat today to subs. It's been closed for a couple weeks. So I'll open the chat to subs today. But yeah, you know, I unfortunately got it wrong today. You know, I kind of did that. Remember the other day, I had called out those lows and it missed by a tick. I missed it by a tick again today. So, you know, that's what I mean, chat. When I tell you guys I'm not always right, this is what I mean. This is what I mean. I'm not always right. It doesn't always hit the target, you know. Or I might, you know, this could have just traded higher and I could have been wrong, but, you know, there it is. What's good, Juan? Yeah, appreciate that. Appreciate that. You know, I do believe that I teach things that most people don't. So we'll probably go ahead and see this rally up above the 993. Probably see that. Probably see that expeditiously. Lows weren't tagged. So that's why I said later on, now the highs are going to be on the table. And yeah, Ricky, I agree. NQ was clean. Monday and Tuesday were probably my favorite days for NQ. Yeah. All right. Well, there's that, chat. There's that. How did you know it was going to be right now? Well, I didn't. But I mean, just look at it, dude. Look at what type of markets see expansion higher. The market, if it's in an expansion, is going to respect, you know, certain things. There's an inversion right there, down candle right there. We traded off of it. Okay, well, what's next? That high, new high of day. See how easy that is? Now, this may not always be worth trading. I didn't trade that. But, you know, it's like free shit, you know? Free stuff, man. Okay, so as far as Friday goes, right? I typically don't like Fridays. All right. Thank you, NCAM. I appreciate that. I forgot what I was gonna say. For the rest of today, okay, the Nasdaq traded a lot lower here, right, versus ES, and then we ended up making some, right, one of my favorite, you know, I'm not really a big formations type of guy, but or type of trader, but you know, whenever we get a, you know, it's technically called like a 3 drives pattern or you know, something like that. I just call it the 1 2 3 because that's what you're looking for. And this formation here, when it does something like that, and then I don't know if it tagged that, but you know, if it does that below a low, right, that's typically a solid indication of a reversal. And then on top of the fact that we had a bunch of clean highs here too, so there's like triple highs right there for Nasdaq. So you see how we rally off of that, and then this is like 1 minute time frame, but that's that first retracement right after triple lows on the way to triple highs, rather, you know. So that's not a surprise here. But again, that same time though, that's when ES was trading here, and I thought it was going to yoink that, and it didn't. So then we ended up getting a reversal for these highs, and I'm like, okay. That's why I said I think it was in here when I was like, yeah, in the Discord, I said now the highs are going to be, you know, on the table. Then we retraced, and then, you know, like we just did at the beginning of the session, finally saw the expansion move above this. So if it was up to me, I don't like how long we took to get up here, but what this is starting to look like for me now is almost like a sell model, but it's kind of a shitty sell model, you know? Like, all right, made new high of day, great, but liquidity down here, so it would make sense if, you know, we got some shit like that, you know, come up, run liquidity a couple times, and then break down and run those lows. But again, it's Friday. We've already had a bunch of clean movement this week, and I feel like that's asking for too much. You know, I feel like it's too much. What did you trade yesterday, Flacco? Was good 2020 in Cameron. They were silly? You're fucking silly, Cameron. Was good, Allison. Was good, Jordan D. Just came from my coffee run. Nice. You love to see it. You sound tired or sick? Yeah, I'm sick of y'all shit. You know, No, it's just the weather's changing. It's getting a lot colder. So when you wake up in the morning, you know, you got like deeper voice, you know? So I'm not sick other than what I said already. But no, I'm cool. It's just drastic weather changes and early mornings. Yeah, you know, in a few hours I'll be back to whatever I sound like normally. All right, let's do this. Nasdaq new high of day. ES new high of day, but I'm gonna take this tweet off now because I don't want to keep having to move my chart like that. And down. So what if we're going to get a reversal, which at this point I don't really know. I don't think so. But if we're going to get a reversal, we would need some sort of divergence up in here. Like maybe ES stabs up another time and then a time after that, but maybe NQ stabs up but then fails to make a higher high when ES does, then that to me would be a reversal to go lower. So, you know, something like that hasn't really printed just yet. Have you taken a look at the metals at all? Have y'all taken a look over there? Have you? What did I tell you earlier about silver? Did I say upside or downside? What was it? And then we'll go through this mind map here in a minute too. What can you tell me about silver, chat? Is there anything that your eyes are drawn to? Equal highs, Toby? Are you sure? Any tips on backtesting? Backtesting is pretty solid, but forward, like actively watching markets and forward testing is a lot better. Hellspawn said 3 lows. All right, I don't know if you're like upside down or what. Triple highs. Yep. Triple highs. 1, 2, 3. Silver futures. December contract 31.47. Okay, real easy. What are we coming off of right now? It's a little bit slow. I thought we'd be a little bit higher by now. But what's it trading off of now? Look at it. What do you think it's trading off of? If this is our target, what's down here? Where has the current low been set? 31.005. Okay. So what was that here in the short term? Small time frame. Sweet. Okay. Look at those bodies. Look at those wicks. Okay. So what does that make this right here? High resistant lows. Where does that fall within that image that I gave you for the free beginner series? Is that a stop loss placement or is that a target? That's a stop loss placement. Right? What do we have here? Well, if that's a low, high, lower, low that ran liquidity and we have upside, what are these up candles going to be? Ooh, mitigation, right? immediate mitigation, imbalance here, and down candle too. All right. See that? And then, yeah, we came back into it a second time, which is not entirely a bad thing. But remember, fractalization. Fractalization. So if you have a larger mitigation, you can also have a smaller mitigation. That's what I'm saying. We traded through that and then into it here. Body's respecting it, and we're coming off of it. But it's doing it very slowly. And that, to me, is not what I would want. But 31.5 seems like it'll be on the cards for today. Or we leave that open. I don't think we will, but we'll have to see. All right. Kind of I got to find a better word for shitty. There's a short-term low, right? And then a lower low, and then that third lower low. So this is kind of a distorted 1, 2, 3 formation, but it forms that right into a mitigation. And what does that make this, Cameron? Cameron was bringing out the quarters level earlier, right? Not quarters theory, but quarter levels, meaning 25, 50, 75 and higher, right? So you have your premium end of the premium, discount end of the premium. Where's this mitigation? And then premium end of the discount, and then discount end of the discount. All right. So this run here into that mitigation below these lows is in a discount. See that? So there's your discount pricing, buying below old lows. Okay. This is what did I say a minute ago? Discount end of the premium. So it's not prime for entering, but it's prime for adding positions. All right. So if you had one or two, or say 2 or 3 contracts in here, I'd add like 1 right here. But this is not. This is taking a long time to go higher. And maybe it's just like my impatience coming out here, but it's taking a long time to get. Took a break even on silver earlier. Gold launched out of the same 5-minute imbalance though. Yeah, I think gold actually ended up being the leader here. So I was like, yeah, silver upside, and then gold ends up taking the cake. So, you know, I picked ES to go lower. It was Nasdaq that hit the lows, and then I told you about silver higher, but gold was the one that hit the highs. So I'm just like all out of sync today. All out of sync today, chat. It's all good. It's all good. But yeah, manipulation, next candle entry, low risk buy, first stage, and then this to me should be the second stage or second leg to go higher. But it's looking just a little janky. I don't know. I don't feel good about it. You know what, G? I actually did mention that on Wednesday's live stream. I talked about that. Actually, it was this one. It was just the Oanda feed, not the future side. But I talked about how we have an inversion here and this imbalance here that we had traded into on Wednesday. So I said we need to see the next couple of days. And then Thursday completely just disrespected that. So I don't know. But, you know, maybe seasonality comes in, maybe it doesn't. I don't know. You never truly know, chat. You never truly know. But I still have all my silver. I haven't gotten rid of any of it. What do you mean overrated? How is the dollar index overrated? Explain that. 107.34, 35. I actually outlined that last night, and I have a screenshot too. I'll post in the Discord later, but it's really not all that important. It was just like, where is the dollar going to go? And it was the high of October 3rd up here. So we extended up and into that, which is not a surprise. Okay. If these equal highs are not going to be a reversal and we still expand higher, okay, what can we expand into? An old high, which is right there. And that would be replicated over in the euro. Same thing. Long-term low, October 3rd. And yoinked that. And what is this large gray or orange box, you ask? I meant to change the color, but I was so tired last night, I just didn't do it. Monthly imbalance. How far can price go below a low? An imbalance, and you already know that. So, you know, there it is. And that's how you get that. That's how you get that kind of information. And I think it was the news that had launched us there, or close to it. All right, see that volatility there? Nasty, nasty. So, but yeah, I don't know how DXY is overrated. Toby, I'm not really sure how to answer that. We haven't really done a whole lot yet. I did a leadership training the other day. It was cool. Everybody liked it. Australian dollar on an intraday basis has equal highs at 65.08, and I was watching it about right in here, but I was like, you know what? I'm not gonna do anything with that. But I did put an alert up there, so if you want to follow along, you can do that. All right. So similar justification. I'm looking for liquidity and I'm looking for relative strength. So for example, New Zealand, London's low, taken. Whereas Australian dollar, London's low, not taken. So the strength was over in Australian dollar. You can actually see that in the numbers as well, because Aussie is down 0.16%, whereas New Zealand is down 0.46%. So yeah, if you're going to long, or if I were to long foreign currency, if I would have done that today, it would have been on Australian dollar. But it's only up like a whole 10 pips from where I was looking at it. So, you know, what can you do? DXY is just the effect of the cause of Euro USD as it weighs 60% at any time. I'm not really sure what to say to that. Yeah, I'm not really sure. So yeah, it's been 30 minutes. So let's take a look at this mind map real quick. I did share it on Twitter. I did share it on my Instagram story. So it's out there. I don't know. I don't think I shared it in the Discord. Okay. Yeah, so I'll pull that up and then we can roll with it. You guys good with that? Drop a 1 in the chat if you guys want to see and briefly discuss the successful traders mind map. Yeah, mind map. No, I'm definitely not going back to Go Live. That's that's a private platform for that MLM, whatever they're called now. But we shall see. No, you guys can ask anything you want. I don't care. I don't care. I'm going to be exposing a lot of shit anyway. So I'm going to be, I won't mention names, for like, obviously like legality and shit, defamation, all that bullshit. But I'll definitely be telling stories of all the fuckery that used to happen back then. Alex, no. And it's always better to ask them directly than to ask me. You know what I mean? I try not to be in hearsay, grapevine, drama shit all that much, because you never know if that information's accurate. So if you have a question, that relates to the trade house, ask Jordan or ask Zach or ask Siva, ask them directly, because I don't always know. All right. So yeah, just keep an eye on ES if you have another screen, but I want to go through this real quick for you guys, so that way we can, have it and be good to go. I'm going to clip this too. All right. So again, this is my version of the successful trader. So this is an interactive chart, or it's an interactive, whatever it's called, so I can like move it all around and all that. Successful traders, like trio, basically. So how this is broken down, okay, obviously from left to right, it's broken down into categories. So the three main pillars of successful trading is just three things: psychology, your strategy, or aka your edge, and risk management. You lock in those three, you're profitable. Okay. Now, even those ideas can be broken down even further and further, meaning like, okay, what encompasses psychology? Well, a lot. But to keep it simple, because again, I could extend this over, and I mean, this could damn near be unlimited, in length, but I kept the psychology side. I broke it down into three things: discipline, self-control, which is similar, but we'll talk about it, and the mindset, right? And so discipline can be further broken down into what? There's physical. This is a misspell. I just noticed that. Oh well, I always misspell something, right? Anyway, let's talk about it. So there's physical discipline, and then there's mental discipline. So physical discipline would be things like waking up early, right? Marcus Aurelius Meditations, book 5. When you wake up in the morning, tell yourself that I have to go to work as a human being, so on and so forth. It could be weightlifting and other forms of physical exercise, right? Walking, going outside, doing that kind of stuff. The moderation of food, for example, like not overeating, for example, eating healthy, all that stuff. And then the physical discipline of execution. So like actually executing trades. So not being hesitant or scared, it's actually executing trades. Just like Mark Douglas talks about, pro traders enter and exit the market like with ease, right? Because they're not scared. Learning how to trade without fear is a mental skill, right? According to Mark Douglas. And so that's part of the physical discipline, is actually the execution of trades, either putting that limit order in, or what I've been doing a lot more the last couple years is market execution. So that encompasses the physical discipline. And then the mental discipline, avoiding things like doom scrolling on your phone. I know we all do it. Avoiding the brain rot content. Most of you know what that is. Like, just, it's pretty much doom scrolling, right? And just stupid shit. The biggest one is probably the victim mentality, right? Avoiding the victim mentality and following the trade plan. You know, if you're in a trade and you're struggling or don't know what to do and you're frozen or scared or whatever, you know, you have to have the mental discipline to follow the plan of whatever your plan is. And one, I've already shared it on Twitter and my Instagram. It's already there. Okay. So that's like the, yeah. All right. Perfect. Yeah. So under my damn it, webcams too, like right in your face. So under the psychology side, right? Discipline, physical and mental discipline. And then also under psychology, the self-control. So that's going to be things like being patient, being slow to anger, and avoiding like heated discussions, you know, that'll piss you off or make you say racist shit, like on Twitter. You know, people do that all the time. Avoiding over trading, right? Having the self-control to not trade more than you're supposed to, and having the self-control to not over leverage as well, right? Fairly self-explanatory. And then the last part of the psychology side, one of my, you know, more favorite things to talk about in the mindset, you know, think, are you going to be victorious or a victim? And you don't want to be a victim. You want to be victorious, right? You want to find the good in every situation. You want to learn from every mistake. You want to turn obstacles to opportunities, right? Obstacles the Way by Ryan Holiday. Growth mindset and open-mindedness. Okay. And then we'll probably just speed through some of these instead of spending a bunch of time on each one. But that encompasses psychology, discipline, physical, mental, self-control, and the mindset. Now, the strategy or edge, I mean, I have like 800 videos on this channel. Most of them are technical analysis. So that's going to be things like smart money concepts, for example, right? That would be under technical analysis, by the way. But I didn't want to include that because then I'd have to further include, you know, the candles, the formations, the imbalance, the inversion. I mean, that's a big list, and I'm not going to include that. So there's your justification for that. But technical analysis, fundamental analysis. Okay, so technical is going to be your charts, like your candlestick, line charts, etc., or even like relative strength analysis. The market maker models, that is a framework that could also go under trade planning, to be fair, but I put it under technical analysis because you still have to look at a chart to get your market maker model, right? And then fundamental analysis, the interest rates, especially if you trade currencies, and seasonality, especially if you trade metals, right? So that's your analysis. And then under the trade planning, you know, your trade plan, what are you going to trade, right? What are you going to trade? What's your entry and exit criteria? That's almost like your entry model, for example, mitigation model, inversion model, NCE, you know, second leg model, stuff like that, stuff that I've given and taught for free, mostly, right? What you're going to trade, pretty much how you're going to trade it, and then when you're going to trade. You know, are you a London trader? Are you a New York trader? Are you a stock exchange trader? Are you a AM, PM session trader? You know, so on and so forth. And then adaptability. You got to plan for various scenarios. What happens if your trade doesn't hit TP, right? What happens when stuff like this? You know, you call out a nasty, nasty short for everybody for free, so everybody can eat, and nobody likes to tweet, right? And then, you know, the market sinks lower and it provides, you know, beautiful profit, but it doesn't hit your TP. So what do you do in that scenario? Well, definitely by 20 points lower. I mean, that's $1,000 a contract. So if you're floating $1,000 in profit, you know, I would probably have my stop at least at like $200 just to lock in something on the day, you know, versus like breaking even. You know, floating a grand and then breaking even, that hurts, man. That'll hurt. So, but anyway, back to the point. You got to plan for various scenarios and not forcing your will onto the marketplace. Okay. So that encompasses a very general understanding of the edge, right? Your technical and fundamental analysis, your trade planning, your model, your entry model, you know, what you're going to trade, when you're going to trade it, and then planning for things that might not go your way and not putting your will into the market. And then when it comes to risk management, again, there's a lot more than this, but to keep it simple, we have capital allocation, risk reward, and stop loss placement. So capital allocation's pretty simplified. I just went with one idea, which is diversification. So I've always said this for a long time, you know, don't put all your eggs in one basket. You know, I never have more than, I think, 20% of my total net worth in one particular account. You know, whether it's a bank account, whether it's a Forex account or a futures account, anything in here, okay? Forex, futures, crypto, stocks, metals, cash, savings, any type of 401k or retirement, you know, accounts, plan, whatever, options, and so on and so forth. So most people who have jobs and are trying to retire at 65, they have most of their money in the 401k, and it's like, you know. Anyway, moving on. When it comes to RR, all right, when it comes to risk reward ratio, or otherwise known as RR, you know, you need something that's favorable. Ideally a 1 to 2 or higher. I just like to go with 1 to 3. I taught you the inversion model, which does have a 1 to 2 RR, but again, you know why that's that. I'm not going to explain that again here. But favorable as in you have to let the math work itself out. You have to let the math work over time, which for me is a 1 to 3, ideally. And the idea is small losses, big wins. And then I include, you know, a really, really good lesson too. There should only be 4 outcomes to a trade: a small loss, a break even, a small win, or a big win. So there never should be a big loss or a large loss. That should not be there. If you're respecting the risk, it shouldn't happen. And then stop loss placement, right? And this is like kind of tied into your trade planning, you know, which is still, it's more of risk management though. Your stop loss placement, and I said this the other day, right? You don't want a stop loss that's too small, right, or too tight. You don't want a stop loss placement that is too large, too wide, too loose, whatever you want to, you know, call, whatever word you want to use. And you have to know, okay, when will you go break even? Are you going to break even at a new high or a new low, or a certain dollar amount, or a certain amount of time? You know, you need to know when you're going to, or you can just be a goober and just never go break even and just always have open risk. I mean, I guess that's an option too. It's not an option for me, but it's available. And then you could have a stop loss based on a specific dollar amount. You could have a stop loss based on the amount of time. And you could have a stop loss based on percentage. So which one is most important? I mean, to be fair, when it comes to risk, I would say percentage is the biggest thing. You know, I'd focus on a percentage. But if the percentage is too big, or say you're working on a combine or a funded account, you might have to go with dollar amount, you know, because that's dollar amount specific. Like for the 50K combine, you got to make 3,000 without losing 2,000 consecutively. So, you know, instead of you might have a 1% risk that you aim for, but it might end up being a little bit over that because of, you know, e-minis or micros or whatever. So it could just be based on a dollar amount instead of percentage. And then trade management wise, I would say it's a stop loss based on time. You know, if the market is in your direction, but it's not going your way, kind of like what I just explained on silver a minute ago. Let's see if we can pull that up real quick. You know, how I talked about how we had came into this mitigation and we traded off of it, but we're spending a lot of time here and it's not rallying. So it's like, okay, it's either going to need to start going there, or I might just cut the trade or just move my stop so close to the market that it might just get me out, you know? So that's what I mean by that. And we're still going to watch this, by the way. Not right now, because I'm going to clip this video, but today's November 22nd. We have triple highs, and I think we're going to launch up there. So we'll see how it goes. We'll see how it goes. But if we, all right, zoom it all out, you know, that's pretty much what that looks like. You guys see that? Yeah. So what you could do, I mean, I've already done this, but what you could do is you could take a screenshot here and clip it. Meaning you could take your prints. If you have a Windows computer, you press the PRT-SC button on your keyboard at the top right. It says print screen. And then you can just drag your mouse and make it a square like that. So you could have just the mind map on there, just with no watermark on it, you know. But if you're going to share it, it's cool, but just share the one that has my name on it. That's all. The snipping tool works too. One, I'm not really sure what you mean by that. A copy of your roadmap to a successful trader. I don't know what you're talking about, but I would definitely start with this. I would start with something like this. But, you know, we don't really talk about like time horizons, or like I said earlier, all the things that encompass like smart money concepts, for example. I mean, that thing would be like all the way out here, you know, like it would just be so much. It would be too much. But this at least gives you a list. It gives you things that I think that you could work on. You know, maybe you have all your money in a fucking crypto, or excuse me, man, I gotta edit that. Maybe you have all your money in like a crypto account, for example. You know, I wouldn't do that. Or same thing with futures. I wouldn't have 90% of my net worth in one futures account. Because if that account gets clapped, you know, maybe something happens and you get slipped, or, you know, you hold a trade over the weekend and then something happens on the other side of the world, and then boom, you get, you know, half your account gone because of a black swan event. And then now you're wiped out, right? Versus if you have like 10 different accounts or 5 different accounts and one of them gets wiped, you won't be done. It'll still hurt. It'll be painful, but you'll still be in the game, you know? So maybe it's diversification, or maybe, I don't know, or maybe you have a victim mentality. Oh, the market's out to get me. I mean, it is, but you have to reverse engineer that. You wait for everybody to get stopped and then get in, you know? So it's like, we're not going to focus on being stopped out. We're going to focus on others getting stopped out, and then us, you know, riding that wave on the reversal. So there's all different types of things that you could review on your own, and you know what you need to work on, because you're you. I don't know you like that. So yeah, hopefully you can appreciate that. You know, I promised I would drop the extended version, and I did. All for the freebie. Know what I mean? All for the freebie. So, drop a. We already have like a bunch of likes on the stream, but drop a drop a gem. Excuse me. Drop a gem in the chat if you guys got some value today. Still cutting my winners too short. Hey, look, I do that sometimes too. It's all right. The biggest thing that traders have to understand, bro, is you're not. Some people say you'll never take the perfect trade, and that's absolutely wrong because I have more than once. But generally speaking, 99% of the time, you're not going to get the best entry, or you might take a later entry with less drawdown and you might think that's better. Or, you know, you might get out at equal highs and then it runs another 10 points or it runs another 30 pips or whatever it is, right? And we can always say, well, I could have improved this. I could have held on to it. I should have added more. I could have passed my combine if I just held this or that. There's always going to be, thanks, Juan. There's always going to be margin for improvement, you know? So as long as you're striving to be better, you know, that's what the goal is. And then once you get, you know, some good trades under your belt, you know, maybe you take a little bit of drawdown, but then it hits your equal or triple highs and then it runs on you. But you're going to get to that point where it's like, hey, you know what? I took a good trade. I made some money and now I'm not worried about it anymore. That to me, I think is a good place to be. Which is why I told you on Monday and Tuesday, I slept in on both days. It's like, well, I shouldn't have done that, but it's not a big deal. I know there's going to be more trades in the future. No pun intended. So, yeah, just strive for perfection, but don't expect to be perfect. And the Stoics talked about the same thing. You know, there was a discussion one time between Seneca and the Epicureans, or Epicureans, whatever it is. And the Epicureans, they were all about pleasure. They thought that pleasure was the highest good, which the Stoics were like, y'all are stupid. And so Seneca was explaining himself, and he was like, the wise man doesn't, you know, think that pleasure is the highest good. You know, the Stoics believed that virtue was the highest good. And that sometimes pleasure comes with virtue, but you don't practice virtues for pleasure. You know, it's kind of like if it happens, cool, but we don't do it because of that. And, you know, he's saying all these things and talking about, you know, what the wise man is and what the wise man is not. And one of the Epicureans was like, hey, you say that you shouldn't put too much emphasis on wealth and clothing and, you know, certain material things, but here you are throwing lavish parties. You're like stupid rich, because Seneca was like a politician almost. He was an advisor to Nero, so it was real close to the emperor. So I mean, you know, he's very wealthy, and basically they called him a hypocrite. They were like, why do you say all these things, but then you do something else? And Seneca's response was very interesting. And he basically said, look, I'm not perfect. What I'm explaining to you is the ideal. And this is what we are reaching for. He's like, I'm not the wise man. I'm not the sage, is what they called it, like the Stoic sage. He's like, I'm not the sage, but I'm working to go in that direction. You know, so he's not saying be like me. He's saying be like the wise man, which like I'm trying to be like. So that's my point, Allison and everybody else. It's not about being perfect. Oh, I need to get the low on the tick. No, you don't. I need to get out at the exact high. No, you don't. You just need something that's low risk, high reward. And, you know, if you can make 1% or 0.5% or more on any given trade, then that's a good day and that's a good trade. You know, don't be pulled into believing that you got to take like some of the trades that I've taken before, you know, where it's like, oh, I'm in right on that wick and I'm getting out, you know, at a new high above it by some points or pips or whatever. And you're like, oh, wow, that's, you know, that's incredible. It's like, well, yeah, but I've been doing this for 10 years, almost 11 years. You know, I've had a lot of practice, but every trade I take isn't that way. You know, stuff like with what I did earlier, with what I tweeted, right? I tweeted right here as price was in this imbalance. It was forming an up candle. Bam. That's when I tweeted, hey, ES has clean lows. And then we sank, right? I'm not saying you have to get a wick entry right here. I am just saying, hey, look, if you can get in sync with price going lower, then you're good. You know, what about this imbalance right here? You'd have sat in a little bit of drawdown, but that trade would have still been profitable, or you would have had a chance to at least have a risk-free trade by going break even when the market made a new low. You see what I'm saying? So it's not about perfection. It's about improvement, and it's about being better, you know? So that's all. But that will be pretty much the end of it. It's the end of the stream. I want to clip this video as well. And silver is wasting everybody's time, including mine. So if we go higher, we go higher. But, you know, it's already 1 o'clock. There's only a couple hours left in the stock exchange for today. I'm not expecting much. It's Friday anyway. So I'd rather just go have lunch and, I don't know, maybe a cocktail. We'll see. But that's going to be it. All right. So y'all have a good weekend. Don't do anything stupid. Be blessed. And I will see you again on Monday, November 25th for the next live stream.